In this video, we are going to break down step for step on how we are going to do this strategy. There's 3 steps that you need to know, so please make sure that you don't skip ahead and let's break this strategy down. All right, so the first thing we want to do when we have a market that's moving up like this, it's coming down and we go up again, we go down. We want to wait for certain things to happen. First of all, we want to identify, are we in an uptrend or are we in a downtrend? So how we determine it, if we break highs, we know we are currently in an uptrend. If we break lows, then we know we are in a downtrend. And then again, as soon as we break some highs, we know it's an uptrend. And as soon as we break some lows, we know we are in a downtrend as well. So what we want, right? There's a specific character that we want. So let's say, for example, price is coming like this, and this was a high right over here. We want price to take a liquidity, all right? Then what we want to wait for, we want to wait for the low that created this high. We want to wait for that low to be taken out. As soon as that low has been taken out and we have a high and a low that's being created. So this high was the one that took out this low. So now we know we are in a change of trend. So what we want to do now, we want to take our fib tool and we want to draw the fib from this high to this low. And we want to find the golden zone that's from the 50% until the 78%. And that's where we're going to enter and we are going to target the next level of liquidity. In this case, it will be this low right over here. As soon as we have a market structure again, so let's say this was the low, we want a liquidity sweep. Where was the high that's taken out this low? It was this one right over here. So we want price to break this high first, and then we're going to draw our fib again from this low to this high, and we are going to look for the 50% and the 78%, and that's where we're going to enter our trade. So now we created highs. Again, this low was taken out. So this high took out this low. Why this low? Because this is the low that took out this high and we came back. So that's our liquidity sweep. And then we're simply going to wait for price to enter our zone. And we are going to put our trade right over there. And we are going to continue down. And that's how simple and easy the strategy is. So I think with no further ado, let's jump straight to the charts and let me show you some examples. All right, so we are here on the ThinkMarkets platform. On the synthetics, you can see there's the boom and the crashes. We are going to look at the volatility 75, the ThinkMarkets. So we are on the 1 hour. So you can clearly see we are here in a downtrend. We have highs, lows, highs, lows, highs, lows. And in between each leg, there's highs, lows, high lows being created as internal highs and lows as well. So what we wait for to confirm, we want ideally, we want like a higher time frame low or high to be taken out. So basically this is a low, as you can see. And where was the high that got taken? Where was the high that created this low? It was this one right over here. So when we go to the lower time frames, I will show you exactly why this is going to be the high, this one right over here. So remember, we want fractal highs and fractal lows. So that's basically where a candle, for example, this one, the candle on the left and the candle on the right is lower than the middle one. So that's a fractal high. And same with here. the candle on the left and the candle on the right is higher than the middle one. So that makes it a fractal low. So this was the high that's being created. We had a big push up. The next thing we want to do, we want to draw our fib from this low till this high that's being created. And as you can see, I'm going to draw a rectangle from the 50% all the way to the 78. And I'm going to drag that out. Let's just do this. And let's delete the fib. So now you can see we nicely in this zone. So let's go to the 15:30. You can scale down. Let's go to the 15-minute and see how we can refine this. Just to show you a little bit how I got this high as well. So as you can see on the 15-minute, this was the high. There was no pullback really on this leg here. So this makes it the valid high for me. It's get taken out. Remember, this is our zone, the 50 to the 78% zone. And now you can even refine this a little bit more. We have a fair value gap resting right over there. And we have a really small fair value gap resting right over there. So what I will do in a case like this, I would actually just take one rectangle and cover that whole two fair value gaps. And then when we go down, we can clearly see we had a market structure shift right over here when we had that, before we had that nice break of structure right over there. So we came into our zone, right? So now you can clearly see again, we inside here, we took internal liquidity right over here. We had a nice break over there. So that's another one. So you can enter aggressive there, or alternatively where I will enter, I will actually wait for price to enter here. I would go down to the lower time frame and I will just enter right over here with a stop loss below this fair value gap area right over here. So a little bit more of aggressive entry, your stop loss below this refined fair value gap, and your safe stop loss would be the big fair value gap right over here. Just want to see if we can go further down if the market allows us to. No, it doesn't. So that's why I'm keeping on the 15-minute. Let's go down to the 10, see if we can get, there we go. So we on the 10 right over here. Let's see if we can see something. I remember when I looked at this chart, it looks a lot better on the 5-minute actually, but it can't go back that far. So that's all right. So let's stay on the 15-minute, and that's where you can enter your trade. So let's go back to the 1 hour. Let's have a look. So now I always look, okay, where does price reject, right? So if price turned around here, I always drag my line to the left-hand side, and I want to see, was there something that price reacted from? So we can always, so now we can see, okay, there was a nice big order block zone and a fair value gap zone right over here. So let's just mark that whole zone out. We can drag it to the right. So price entered our zone right over there. As you can see, we took actually the liquidity right over there. So let's go down to the 15-minute. Let's see if we can see something. There's our sweep. Let's go down to the 5-minute. And inside of this big leg, there's highs, lows, highs, lows. Here we are on the 5-minute highs and lows. So let's quickly see. We have a low right over here, this one. Why this one? Candle on the left, candle on the right is higher than this one. We took internal liquidity as well. we broke down right over here. Now you can draw your fib from the high to the low. Let's mark out our zone right over there. Let's just delete the fib. And as you can see, we're inside of a big zone. We had the same thing happening on the 5-minute. Price broke right over here, out of here, it closed below, retraced. You can enter your trade. Literally, let's go to a short position. You can enter your trade right over here. Stops above this refined one as a more aggressive one. If you want to put your stops there, you can. It's a little bit big. Alternatively, I will put it above these highs right over there. But for the sake of this example, let's go to this one. And we can just target a fixed 1 till 2, 1 till 3. Or we can target the next obvious level of liquidity. That's going to be resting down here. Liquidity right over here, liquidity right over here, liquidity right over here. And that would be my obvious target to go. So let's go back to the 30-minute. Sorry, 1 hour. So there's our trade. When we look at the bigger picture, when we go to like the 4 hour and we draw our fib from this low to this high, now you can clearly see we are inside of this zone right over here. So let's see what's happening inside of the zone. We tapped in our zone, tapped in our zone again. Now we created liquidity right over here. Let's go down to the 30-minute. Let's scale down. Let's go down to the 15-minute. Here we go. We closed below this liquidity right over here. So where was the high? It was this one right over here. We had a big push up. Now again, you can draw your fib from this low to this high. We are inside of the zone right over here. Let's delete the fib. Long position tool, if you enter right over there, put your stops there, or if you want to be a lot more conservative, but then you need to change your lot size, you can put your stop right over there. For this sake, let's put it over here. This is current market, and let's target the next obvious level of liquidity. That's a 1.5. We at least want a 1 till 2. And that overlines actually with this liquidity right over here, this high right over here. So let's target that one. And then that's a 2.14 risk to reward trade. So let's see how this one plays out. I will give you feedback on how this one plays out. And that's how easy the strategy is. Everyone, literally follow these steps, go back test it for yourself. Let me know in the comments what you think. And then, let me know. And then please leave a like and subscribe. And then I'll see you in the next video. And go check out ThinkMarkets, the ThinkMarket platform. Their synthetic pairs are also amazing to trade on. So let's go. See you in the next one. Cheers.